Oil prices are at their highest in 4 years. Brent crude is trading around $125 a barrel. That means one thing: higher losses for India's oil companies. But this time the story is not so simple, because even as benchmark prices rise, the actual cost of buying crude is falling, and that could soften the hit. India's oil marketing companies buy crude in two ways: through long-term contracts and spot purchases. Right now, it's the spot market that is changing the story. When these firms buy crude oil, they not only pay the benchmark price, but they pay a premium on top of it to secure physical barrels for immediate delivery. Now, those premiums have just fallen since March. Before West Asia's war disrupted global supply, premiums were barely a couple of dollars per barrel. Sometimes sellers even offered discounts. Then the war hit. Physical crude became scarce and premiums exploded. West African oil, a key source for India, saw premiums climb to $20 to $30 per barrel in March. But today, those same premiums have more than halved, down to around $13 per barrel. Now let's talk about Russia. In March, Russian crude accounted for 45% of India's 4.45 million barrels per day. During peak disruption, India was paying over $10 per barrel in premiums for Russian oil. Now those premiums have dropped to under $5 per barrel. Last year, Russian crude was actually selling at a $2 to $4 discount. So why are premiums falling? First, more supply is coming back. Flows from Africa and Venezuela have increased. Second is policy intervention. The Donald Trump administration temporarily waived sanctions on Russian oil, boosting global availability. That waiver now runs till mid-May. And third is market adjustment. Buyers are finding alternate routes despite disruptions. Saudi Arabia is India's second largest supplier right now, shipping around 700,000 BPD in April. But May was painful. Saudi Aramco raised its official selling price for India by $19.5 per barrel in May, up from $2.5 per barrel in April. But India expects Saudi Arabia to cut those prices again for June after premiums hit a record high for May shipments. The structural problem has not dissipated though. West Asian flows to India fell from 3 million barrels per day in February to only 1.2 million BPD in both March and April. Because shipments through the Strait of Hormuz, a major artery for global oil, have been disrupted. India's total crude imports in April, 4.45 million BPD, unchanged from March, but still 800,000 BPD lower than pre-war levels. So where does this leave India's state oil marketing companies? Well, they're still losing money. Benchmark crude is still expensive, but the collapse in spot premiums is a relief, and it is coming at the right time. The question now is how long it holds. The war has not ended, supply risks have not disappeared, Trump's sanctions waiver on Russian oil runs only until mid-May, and Saudi prices for June are still unknown. Follow Business Standard for more stories.